like you said, the bottom line is they have a bottom line. And as long as they're putting themselves out there, they're getting marketed and all of that, they're going to be just fine. So, and there are certain situations where someone might have a bottom line and they may have to shave off a little bit. And that's where that kind of comes into play.
Service members should get the most out of their VA benefits for home ownership. That's our belief, and that's why we're here. So whether you're looking to own your dream home, considering refinancing, or just exploring the VA home loan process, you've come to the right place. Welcome to Helping Heroes Become Homeowners. Hey everyone, my name is Richard Sarey with Alliance Mortgage Group, and this is another episode of Helping Heroes Become Homeowners. Today we have a few folks with us, Ryan Gibson with Alliance Mortgage Group, Senior Mortgage Broker, and Rene Sanchez-Mosley with the Crew Real Estate Group out in Van Alstyne, Texas. Rene, thank you for joining us today. We have a lot of good things that we want to talk about. A few topics are going to be what mortgage rates are doing in the market. We've got buyers on the sidelines. Maybe they're going to come off the sidelines now, possibly. I know there's a big announcement coming next month by the Fed. Are there refinance opportunities out there if you're FHA or VA finance currently? And more importantly, what that NAR settlement has done, changing that landscape for buyers and sellers moving forward. So Rene, thank you for joining us today. We really appreciate you being on.
Appreciate you having me on here. I really do.
So tell us a little bit about why you got into real estate, what led you into helping buyers and sellers purchase real estate.
Oh man, it's been so long, I can't remember. No, I love building relationships and helping people. And, it's someone the other day we were talking and I'm like, it's a service. And so serving people, and that's just, a passion of mine. So serving people and helping them get somewhere, or some people being in a situation that they need to get out of and to a better situation. So that's really kind of what why I do it and why I love it so much. And sometimes it's hard and sometimes it's a very beautiful thing. So it's all about serving for me.
And how long have you been doing the real estate?
17 years, a little over 17 years. I got my license when I was very young. I was 19 years old. I went to Champions Real Estate School and I knocked it out and got my license. And a lot has changed over the years. And so, and I know we're going to get into that in a little bit. So I've gone through a lot of changes. Even like when I first got my license, we didn't fingerprint, we didn't anything. I had to go and I was like, why are we doing this now? And, it's all for the better, but I feel like I'm the grandma of the real estate industry.
Well, then I'm the grandpa. We're the grandpa of the mortgage industry then. That's for sure. A lot of experience on this podcast today. Mm-hmm. So I want to talk a lot about what's on top of mind in the media, or has been in the media, is the settlement ruling with NAR, how that's changed the landscape, maybe what you've seen so far, maybe your take on maybe some unintended consequences that may come out of that.
Well, I think that, like I said, some things have changed for the good and some haven't. To me, nothing has really changed. We're disclosing more, right? My biggest thing to tell anyone, and this is what I have told people that have asked, that have been watching this media thing, is find a realtor that you have confidence in and work with them. If you don't have, it may not be your best friend. Your best friend that just got her license may not be the realtor for you because you have a situation. Find that realtor you have confidence in and work with them. And, we are going to have more disclosures, and it's breaking it down and explaining it more. But the biggest thing is to find a realtor that you have that confidence in, that can do their job and fits your needs. And so I don't think anyone should be too scared. And, if they ask you to sign a buyer's rep agreement, sign the buyer's rep agreement. That's, when you list your house, you sign the listing agreement. So it's not any different. So I think that's my biggest take on it. And my biggest piece of advice is to find a realtor that you have confidence in. And if you have specific questions, and go to them and work it out. But I don't think that there's a big, scary, we shouldn't be doing this, change in it.
So it's been what, since things went in, and I've already had a few actions, looked close to see if there was anything different. Did the seller still offer the same concession that they had in the past? And
absolutely.
Different. I haven't run into a transaction in which the seller did not offer the same commission, because for a seller, this would include me. It's all about the bottom line. I don't care if I'm giving so and so this, so and so that. I need to sell my house for this, and I'm looking at that bottom line. It's only been a couple weeks. Have you guys seen anything different yet on any one of your?
No, and that's the thing is like I had someone talk, on one of my listings day 2 into this. He's like, kind of nervous because he wanted to write an offer on one of my listings, and he's like, "Is the seller offering compensation?" And it kind of made me careful. And I'm like, I'm doing business per usual. I'm asking my clients to do business as usual because you're going to set yourself apart if you don't. You don't want to be the only one offering no commission because then you're not going to be in the competition. It's business as usual. I don't see sellers really thinking, like you said, the bottom line is they have a bottom line. And as long as they're putting themselves out there, they're getting marketed and all of that, they're going to be just fine. So, and there are certain situations where someone might have a bottom line and they may have to shave off a little bit. And that's where that kind of comes into play. Put it in the contract, we negotiate, and it'll be just fine. Everybody will be happy still at the end of the day.
Yeah.
So there's been no added stress to the buyers when they do that negotiation with you or whoever buyer agent they want to use.
No, I think
there's still the room for negotiation. I mean, what leads someone to say, okay, I'll do it at 1.5 versus 2 or 3 from a realtor perspective?
Right. Well, there's no added stress. You have to put that, whatever the realtor can put whatever they want, the buyer's agent can put whatever they want in that buyer's rep, and they can put 3%, 1%, 2%. What I am saying is I'm going to do the best I can. I'm putting 3% because I'm worth 3%. And
right.
I'm going to do what I can to get you that 3% covered by the seller. And 9 times out of 10, the seller's going to cover it. They've already gone through with it. If they have a good listing agent, it's already been handled. And if I can't, we're going to figure out a way that makes everybody happy and negotiate it in the contract. And that's where I'm worth my 3% is I'm excellent at negotiating, and we're going to get it done. And if they're not happy, I'm not going to let them lose a deal because they only want to give me 2% and I want 3%. We're going to figure it out.
Yeah.
So, but that's where I just kind of come in with, I'm worth my 3%.
That's important. There's a lot more than just writing up a contract.
And it is. And knowing your value and knowing the experience, I had, and a great example is I had a realtor call me recently on one of my listings, and he was like, hey, we're going to need the seller to do he asked me if it was city and septic. It was outside the city limits. And I was like, well, it's septic. And he said, we're going to need the seller to do a septic inspection and blah, blah, blah. And I just had to educate him a little bit. And it was like a $900 thing. And I would go, why would we do that? We have to register with the county, and it's checked quarterly and inspected quarterly, and he has to file it with the county, and it has to go through regulations and everything. So why would we waste money on something like that? And so it just goes to show, use a realtor that knows the market, use an experienced realtor, and you'll be just fine. In any situation, use an experienced realtor that knows what they're doing, whether it's negotiating for that or for a septic system.
Well, and on the flip side, the agent is offering to list your home at 1% or to represent you as a buyer's agent at 1% or something like that on the census. That may seem great. That can sometimes be a red flag if they do it for so cheap. Not always. Maybe it's just a friend doing a friend a favor or whatever, but it's cheaper than always. It's for darn sure.
100%. That's why I said sometimes your best friend isn't the realtor for you because, they don't have the experience that comes along or they don't understand. Everybody is different and everybody has different needs. And if you haven't been there and done that, it's just you really just need to interview those agents and just talk to them, have conversations, ask those questions, ask hard questions,
Yeah.
It's funny. I saw on TikTok last night in my boring evening life scrolling through, and there was a picture, maybe been Instagram, but there was a picture of a lockbox. It was on Facebook. It was a meme on Facebook. It was a picture of a lockbox, and they opened up the lockbox, and it said 3% buyer commission in it because you can't put it on MLS, but it's in the lockbox. I thought that was kind of funny.
That was hilarious. Or mowing the yard and leaving a little 3 in the yard. I've seen people do that. It's funny. I think I'm a very straightforward person, and I believe that we all should do the right thing. And I think we've operated this way for so long. And this is, what's fair, and it's, so I just think I just do business per usual. So we'll see.
I got to say, I mean, Rene, getting close to two. It's about service, and that's what she loves about being a realtor. And a lot of people say, I want to give credit to you, Rene, because you actually act it out. You do every week, I believe, meetings in the morning with ladies around this area, do a Bible study. You lead a local networking group that is not just a group that shares leads with each other, but also works to try to give back to the community with whatever's going on. And I've always admired you for that, because you don't just talk the talk; you actually do those things, and that's awesome.
Well, thank you. I think that it's important. I believe that if you're out blessing others, you'll be blessed too. But that's not why I do it. I do it just because it really genuinely, I enjoy serving. And so it goes from my job to, and when I get to be a part of something so great. I just have recently had a transaction where I sold something off the market, and I have 8 other listings that are sitting on the market that, on paper should sell, but this one just, I sold it off the market in 2 days, and it was a pretty decent amount. And I'm like, wow, that was all God. But, when I do things like that and I get to see such blessings and things like that, it's such a heartwarming thing. And I'm like, this is why I do it. This is why we serve, and this is why we do things like this. And so it's not always when there's hard things like, all the media and all the NAR and all the interest rate chatter and things. It's, they're still good, and there's still real estate happening in the world.
Yeah. So one thing too that I read today, the buyer, let's say there's a situation where the seller is not going to pay, and it's got to come out of the buyer's pocket. So from a lending standpoint, we can include that in concessions if the seller is willing to do some concessions, right? But more importantly, what the report came out is retail lending versus wholesale lending. There's to do. We can broker out the loan. Retail is like your big box retail, prime lending, supreme lending, fairway mortgage, those bigger type retail loan outfits. But more importantly, what they've concluded is that doing a loan through a wholesale lender versus a retail lender saves the consumer almost $10,000 in the overall transaction cost in the life of the loan. So there might be a situation where if that particular customer needed some help, it might be an avenue for them to touch base with a mortgage broker to see if they can save some money on closing costs to pick up that shortfall. So that might be something to consider if you're listening out there, to always compare, get a couple of quotes, right? Get a quote from a retail lender, a bank, a mortgage broker in your area, compare the two or three, and see what's the better way to go to help you lower that cash to close. Because you may have a situation where you need to do that. Yeah.
Even when I have people come in on the buy side, I'm always like, hey, do you have a good lender? How do y'all feel about your lender? Just because sometimes, I have, when people make an offer and they're like, we can't go anymore, even in those situations, I'm like, well, I have a couple of great, I have a mortgage broker. I'm always, Ryan, I trust his opinion 100%. So if he tells me something can or can't happen, it can kind of make me, yes, we can take this offer, no, we can't, kind of deal. So one day I had to finally say, we won't take your offer unless y'all go through a pre-approval process with our lender, our preferred lender, just because I'm not necessarily sure that y'all are qualified, and that, I think they did call them and I never got anything else from them. So, but I do agree. I think shopping around and just getting an opinion, especially of a mortgage broker, I think that is the best route that most consumers can do.
Yeah, absolutely.
That research done by Polygon, it was on average 2,662 is what somebody says by going with an independent mortgage broker like us versus a retail lender, bank, whatever. But it was over 13,000 for veterans as well.
Yeah, which is huge.
A big number. Yeah.
Which is sad to say that it's higher than conventional because there's caps on what veterans can pay on a VA loan.
Yeah.
So you have some lenders out there that are still charging huge amount of discount points on the loan because the discount doesn't get included in that cap because you can discount the rate. But in terms of your other costs, that gets calculated into that. So if you're a veteran out there and you're paying discounts to get to a certain rate, there's lenders out there that have to charge that or do charge that. You definitely need to talk to someone else and get a second opinion for the most part.
So,
which kind of leads us, you want to say something else, Ryan, on that?
Well, we were probably going the same place. It leads us to what Rene texted me this morning. Man, just wait until 1 o'clock and we're going to cover this. I got a text, and all it said is, what are rates today? And that's the question. I assume this is where you're about to go, Rich?
I was actually, yep, absolutely.
Yep, that's the question we're getting a lot of because, again, of what's in the media, news, and whatever. And it's hard for us as lenders to just directly answer that because, as you both know, there's so many variables that go into the rates we can get somebody. But rates have come down. They came down quite a bit in kind of right at the end of July. They've flattened out since, but they came down based on the news that the Fed was going to lower rates. There are people that are now saying, well, they're lowering them in September, so we want to wait till then to take whatever action, refi, buy, whatever. And that may pay off, but that news that rates are coming down, that's already in the market. That the market reacted to that in July. And that's why we're seeing rates level out, even though that's still coming, because it's already baked into the market, as we like to say. But yeah, go ahead. What were you going to say on it?
Well, I mean, that's true. I mean, there's still a handful of economic reports that are going to come up between now and September 18th. But for the most part, like you said, the Fed's already in code on their press releases that they are going to do something. It's time to do something, right? So the market, they're smarter than everybody else. They already know that. So they've priced that in. Now, what they're pricing in is, are they going to do 50 bips? Are they going to do more than 50 basis points?
Yeah.
If so, then you're going to see maybe a different reaction from the bond market, and that's going to lead to long-term rates. But for the most part, there's no data out there telling us why they would do that. You have inflation still hanging out where it is now, almost 3.5, 3.25, whatever it is. And then your employment data isn't really moving as much as they think it should, but we're not in a recession either. So they're trying to avoid a recession kick by maybe going too crazy, because if we go too crazy, the market's going to say, why'd they do that much? And then you're going to see the stock market just tank. Yep. And then that's going to correct. So it's very fluid on the data, and it's very fluid on what rates do on a day-to-day basis. But, like Ryan said, he gets that question every day. I get that question every day, get the question every day on people currently in our pipeline. But for the most part, when it comes to September 18th and they make that announcement, I don't see a whole lot of change right away on that day. You're going to see what the market reacts to the data between now and then afterwards.
Yeah. Yeah. And, one of the things we talk about with rates, and this kind of ties into the whole, that reporting that we got this morning that people save over $10,000 using a mortgage broker, that ties into rates today in a weird kind of way. I like to say to people when they talk or ask about rates actually don't change. I can get you the same rate that anybody else can get, or anybody else can get the same rate that I can get. What separates us from a retail bank is the cost to get that rate. I can get you that rate for less than what a big bank, say, can get that rate. Rates don't change. It's the cost of that rate on a sliding scale that moves daily, sometimes multiple times throughout a day. And looking towards the cost of these rates to go down so that it's affordable to hit 5%, where maybe today it's not really that affordable. That's what's changing on a regular basis, if that makes sense.
Yeah, that's absolutely right. I mean, we all have the same rate grid. It's a matter of what's going to cost to get to whatever rate from A, B, and Z lender. Yeah. Goes back to the broker world where we broker, with our investors. We have 5-10 investors that we do a price sifting through, and we see what we see, and each lender prices it differently. So it does make sense to at least work with the broker to get an idea in one phone call what the best possible rate is for your situation and what you're doing.
Yeah.
Rene, are you seeing a lot of people on the sidelines right now talking about, I'm just going to wait and see?
Yeah.
Yeah.
A lot of people just waiting to see what the rates are going to drop, what the election's going to bring, and all the things, and I'm like, why?
Yeah.
The real estate agents, I'm like, why? Do it now. Let's go. And you do have those few that are, kind of slowly starting to watch it drop, and then they're kind of getting a little nervous and starting to really move. And then you have some that just, it doesn't bother them either way, and they're going on business as usual. So I'm really hoping that, come the next this September is a little bit more of a move. We'll see, and the talk in our offices, longer days on the market, longer everything. And I'm like, to me, I'm like, the days on the market aren't that long compared. If you look at the past few years, I remember when our average days on the market were longer, so I'm just kind of like, we shouldn't panic as much as we are. I try to tell myself this daily, but I hope that some of these people on the sidelines hurry up and move, and that it does drop enough to kind of just tip them just a little bit, get enough excitement.
One of the things you could talk about that mindset, we're never trying to be into buying a home. Like, that's not what we're trying to do. But we do want people to have good information so that they can make decisions. And one of the things, I've had this conversation multiple times recently, I know Rich has too, if somebody has that thinking, is if rates do significantly drop beyond what they've already dropped, what that could do to the market, what that will do to the market.
Mm-hmm.
If rates drop another half a point, you're going to save, depending on the loan size, $25 a month, $150 a month, maybe $250 at the most, let's say. But what's going to happen to the value of that home if a bunch of demand comes in with lower rates? It's going to go up a lot more than what you would save there. That's one mindset. And then when we talk about rates always drop or whatever during election years, there's actually no data to support that. Rates move up and down based on data. And, you go back to the attempted assassination of Trump. Well, if politics played such a big role in what rates do, then where was the big rate spike or rate drop on the day that happened or the days after? There was nothing that happened in our markets after that, because politics really don't impact our markets like people tend to think. So those are two things people, in my opinion, need to keep in mind when they're making decisions based on those ideas, because the reality is sometimes those ideas aren't quite aligned with what we've actually seen in the past.
Yeah. You also have trillions and trillions and trillions of dollars in the market, and you have billions of dollars wanting to be spent that we haven't even seen yet. Inflation is not going to go to 2%. It never will. But they want to project the indication of what they're trying to do. Politics have nothing to do with what the inflation number is going to be. So when it comes to who maybe be in the White House, maybe policy may dictate whether or not rates go one way or the other from a dollar perspective. But in my opinion, it doesn't matter who's going to be in there. However, when you look at the policies of both people running, I don't see rates going below 4%. I think the range is going to be between 4 and 5 is going to be your norm.
100%. And I feel like there are some very uneducated opinions on that. And I think that that's where we run into those sideline people, because they think that they're going to get the 99-cent gas prices and the 3% rates, and and I don't think that's going to ever be a normal or ever be a thing again, so. And I don't think that, a 5% rate is a bad rate. When you look at it and you look at history and you look at all the things, I just don't think that it's all that bad. Now, I do think, $3.99 gas is a little high, but other than that, I think I can pay 5% interest rate.
Yeah. Well, I wish I had a crystal ball, but we don't. But, just from reading the data, looking at the data, when reports come out, how the market reacts, there's no indication of rates ever getting where they were in 2020, 21. There's no incentive to do that. There's no reason to do that. The market is just going to play out as it should.
Agreed.
I think, if my message is you have an FHA or a VA loan on a home that you bought in the last couple of years while rates were inflated at some of the highest they've been in quite some time, I think you would be wise to look at it today. Those FHA and VA deals, streamline refinances if it does make sense. There's no appraisal. There's no credit qualifying. There's no income docs needed. There's normally no asset docs needed. It's a very easy process if the numbers make sense. If you're waiting because you think it's going to make even more sense later, you might be right. We'll see, but you might be wrong. If you look at what rates have done over the last month, they've totally leveled out for the most part after that announcement that the Fed was going to lower rates in September, which is what we normally see. Call us. I mean, we don't do high pressure sales. We'll give you the numbers. You decide. But I think it'd be wise to look at now if you bought in the last couple of years to see what it would look like today.
Yeah, that's a very simple process. Like you mentioned, we really just need a copy of the current mortgage statement, copy of your current homeowner's insurance policy to show what the premiums are, maybe an estimated idea what your credit scores are. But for the most part, it doesn't take us very long to put that together and see if there's a benefit. And if there is, then we leave it up to you. Lock now or submit the loan and float. You don't have to lock the loan to submit a file. You can float the loan and let the thing ride out, let underwriting do its thing. And then if you want to lock, pull the trigger. But for the most part, you could be, well, I'll give you an example. Ryan, you just closed a loan yesterday. We were there at 7.5%, 7.25% on an FHA loan,
Yep,
I believe. And you something like that. I think 5.5%.
Rate bounced around a little bit yesterday, but I think we ended up at 5.5.
Yeah. So it would save them what, $250 a month on the payment, and we didn't extend their loan amount at all to do that.
Yeah.
So
yep.
That's just an example of how that loan works.
Yep. No appraisal. Not to mention we start to finish, we're done in 10 days.
Yeah.
Wow.
Yep. So
that's great.
Yeah. Yeah.
So we talked about streamlines. We talked about the market. I want to dive in before we wrap this up, Rene. What is the local market in Van Alstyne doing, and why should maybe customers consider Van Alstyne? What makes Van Alstyne special?
Oh, I could talk about Van Alstyne for days. I'm born and raised in Alstyne, and I'm very proud of it. But we're growing. We have a great school district, and I think that we're still the small town values as we're growing and all the things. Our market is, I think, it's staying. I mean, we have inventory. We have inventory that's on the market a little bit longer than it has been, but we're still seeing, activity. We're not, I think compared to other towns in North Texas, I think we're still pretty on a steady flow. So I think, and we're building, and they're building great things, and there's, a lot coming. We have a brand new high school that's just gorgeous and stuff like that. So I think that if you're looking to move to North Texas and you want to get ISD and you want, to be close enough to a big city, but kind of out of all of that, Van Alstyne is just ideal. You can jump on 75 and be in Dallas in about 45 minutes or less, depending on traffic. So I think that overall, it's my favorite town. But if you want to go a little north, it's a little bit cheaper. So, but in this area, I think we have great home builders. I mean, we have great new construction out here, and it's just getting better. I mean, it's just gotten, I've been so proud of the development that has been here. You have bad development and you have good development, and, it hasn't been one of those towns that's just been overtaken by multifamily home type stuff, and it's just gotten the good quality builders here. So you don't have a lot of the riffraff that you get in those other towns that have allowed a lot of that to come in. So, but yeah, I mean, I could talk all day about the school system and everything else.
So I read that McKinney and Frisco are like the top two North Texas cities to move to. If I'm looking at McKinney and I'm priced out in McKinney, how far is it from Van Alstyne to McKinney if I want to consider Van Alstyne for property?
I can make it to McKinney, 12 minutes, 15 minutes max.
Okay.
In McKinney, right there, 380 and 75 at Hope Fellowship. And it takes us like 16 to 17 minutes to run down.
So if you're considering McKinney and you're priced out, you may want to consider taking a look at Van Alstyne.
Well, like what? what a lot of buyers do is that's typically why they come this direction is they can get a little more for their money this direction and a good school district. So, that's kind of, an important factor of why Van Alstyne kind of blew up.
Yeah, Van Alstyne schools are rated schools. Yeah, they said it's a brand. That freaking place is awesome. It's beautiful. It's gymnasium part of the classroom area. It's really unique. But the other thing that you don't get in McKinney or you don't get in Frisco or whatever is these like bigger lots that would arm and a leg in Frisco or McKinney. And it's not that they're cheap here, but they're far more affordable here to buy a house with some land than it is down there. That's one of the biggest differences. But even on more traditional, quarter acre lots, you get more bang for your buck here for sure.
100%. 100%. And I mean, I have it happen all the time. Like I had a listing on the market, 3 weeks ago. And I mean, we priced it right. It went under in 7 days, and it was an acre lot with a pool and 4-bedroom house we listed it for $599, and because the seller was motivated, and it went under like that. So I mean, and you don't get that. You can't get an acre with a pool in McKinney for, I would say, under $700,000-800,000. So that's kind of, and a great school district. So
yeah. Less traffic.
Less traffic. Depends on the time of day. So now we're going through a little bit of growing pains at our stoplights, but they're figuring it out.
I moved to Frisco when there was 30,000 people. There's over 300, and the traffic. I mean, they've always done a good job of planning all the expansions and all that, but it's still, you look up and you're like, where do all these people come from? Why is there so much traffic at 3:15 in the afternoon? Or 2 o'clock. I mean, there's people everywhere. Don't these people work? I mean, what are they doing in town? But for the most part, people are moving to Texas. People are buying homes. I mean, we're blessed to be where we are doing business and putting people into homes and helping them get the financing for it. But for the most part, inventory is still going to be a challenge for a while.
Yeah.
That growth that you're talking about, that especially for Van Alstyne, where there's still so much room with all the jobs coming to Denison, Sherman, not to mention jobs coming up from Anna, whatever, it's just going to grow and grow and grow, and demand's going to go higher and higher. And if these rates drop, that days on the market's going to start coming right back down. This is going to be buying in this area is great to raise a family. That's all great, but it's also, in my opinion, a really good investment. Buying real estate is a good investment, in my opinion, 99% of the time. But this area is not only a great place to raise a family, but anything you buy here is going to be a really good investment financially.
100%. It is.
Yep. Regardless of what rate you get on the mortgage.
Yeah.
Yeah.
Like you said, you can always refinance it later.
Yeah.
Yep.
Because, I mean, even like some of these properties, I mean, if you want a few acres, you're not going to find that. I mean, we're running out of acreages south, so you're not going to find that. If you have that here and you hold on to it for a few years, I mean, I just sold a big property in Anna. It's kind of in between Anna and Van Alstyne, and I was like, man, in 3 years, it's golden. And he got, so to hold on to it for a few years, and then you've made a big investment in your future.
Yeah.
Your kids' future, your family's future,
Yeah, absolutely. I had an opportunity maybe 15 years ago to buy some land in Prosper. I think 10 acres or 5 acres. At that time, it was like, I don't have the extra scrap to do that. But if you did, I mean, come on, you would have made out like a bandit, because that's just insane change from what it was 15 years ago to what it is now. So, take advantage of the opportunity when it's cheap and make some money down the road.
100%. But even with property, like buying a house right now, I mean, like my house, for example, if we move when my kid graduates in a few years, it'll probably be a rental property or whatever. But I mean, keeping a house in Van Alstyne in town, just having that is great investment to have forever. And it was just one of those things that, oh, we're going to be here for a few years, and then the market changed and we're like, we ain't going nowhere. You know what I mean? So, but just having that, I just think like now I'm like, we're going to hold on to this, man. We should have bought that house down the street too. And, kind of deal. So, but Van Alstyne is just it's just one of those towns that I don't think is ever going to lose its value and ever kind of like lose that. It's going to always have that higher end feel to it. It's going to be a higher end town. I'm not going to throw any other neighboring towns under the bus.
Well, we've talked a lot about mortgage rates, how to refinance your home, NAR settlement, why Van Alstyne is a great place to live. Is there anything else that you guys want to discuss real quick before we wrap it up?
I mean, Van Alstyne has a great downtown area if you want to come visit. We have events. Check out the Van Alstyne community page, the Parks and Recreational page for events. We have concerts and everything. We have a farmers market on Tuesdays and everything. So, I mean, there's a lot here.
It's growing fast, but they do a really good job all town.
100%.
Yes, going. When's fall? It's called, isn't that?
October 12th.
October 12th. So that's a really cool. If you're interested in Van Alstyne, come up here October 12th from morning till through dark. It's a fall festival. There's carnival rides for kids. There's all sorts of stuff. And Tracy Bird's performing, I think, starting at like 5 or 6, I want to say. All free. And you can spend the whole day up here. And they do it every year, but they do a ton of other stuff throughout the year. They're building parks and not just houses. They're doing it well. They don't make everybody happy all the time. That's impossible. But in my opinion, they're doing it really well. It's coming in.
Yeah, and if you need a local realtor, then knows Van Alstyne.
Absolutely. So let's talk about that. How do people get in touch with you, Rene? Is there a website, phone number?
So you can we're working on our website, so we're revamping those. Hopefully they'll be up and running soon. But you can find me on Facebook, Rene Sanchez-Mosley. And even if you need someone to pray for you or anything, just give me a friend request and send me a message. I'm always just here, happy to give any type of advice or just be a friend and serve. And I'm always in the community. I do, like he said, I do a women's Bible study at 9:00 on Thursday mornings at the Honeyloo Cafe in town, coffee and stuff like that. So I'm sure you'll have my contact information on here somewhere. So
absolutely. Ryan, how about you? How can we get in touch with you if we want to get a quote for anything?
Oh, you got a website. It's Ryan Gibson Mortgages with an S.com. You can call or text me 214-763-6394 or send me an email, rgibson@alliancemtggroup.net.
Perfect. And again, my name is Richard Sarey with Alliance Mortgage. If you like our podcast, please subscribe. Our social media links will be on that podcast. You can find us anywhere. Well, guys, I appreciate you being on, and we look forward to seeing you guys again. If this episode has been beneficial, we'd love to hear from you. Please leave us a review on your favorite podcast platform. Also, for regular updates and tips, make sure to follow our social media channels, which you can find in the show notes. Until our next episode, keep making homeownership dreams come true.